What's going on, guys? In this video, I will be diving into liquidity in depth because most traders think they understand liquidity, but in reality, they look at the markets as patterns, and this is the main reason why most traders keep losing and why they end up on the wrong side of the markets. So, to truly understand liquidity means knowing where buyers and sellers are getting induced and where they're getting trapped. Okay, so what do I mean by all this? Well, because most traders look at structure, okay, they trade with structure or they look at the market as patterns. You'll see the market do certain things to induce traders, okay? So to understand liquidity, you need to understand where buyers and sellers are getting induced. All right, let's go into the charts and look at or follow liquidity and where buyers or sellers are getting induced, okay? So over here, you can see the market is moving to the upside, okay? Comes lower, takes out this low over here, inducing some sellers into the market, okay? And then the market moves to the upside, comes into this high over here where sellers are trying to sell. And what ends up happening? You'll see some sort of reactions from there, okay? Possibly taking out some low to the left, right? Internal low, and then moving to the upside and finally trapping the sellers, okay? And then once sellers are trapped, you'll see that the actual move happens after sellers are trapped, which happened right there, coming lower, taking out this, and coming into this low over here. Okay. Now, why is this low over here important? Well, because we got this happening right here. We got structural liquidity below here. Okay. So what ends up happening is the market comes below, respects this low over here, and moves away. Moving away because you have to understand there's buyers and sellers on both sides, right? So you have buyers trying to buy because that high was taken out, and this is just a pullback for them to buy, right? And then you have sellers that are trying to sell because of this break of structure right here, okay? That market structural shift or break of structure. Now that the move happened, right? This move lower happened, sellers need to get trapped again, right? So you got buyers over here that get induced by possibly taking out this high or even taking out this high, right? So now you'll see the market come here, respect this high over here, come lower, take out this internal low, induce sellers or early sellers, and then you'll see that move up, trap the sellers, and then you can see the move lower towards the lows, right? And ultimately, well, towards this low, and ultimately this low over here, okay? Also, coming into this low over here, you'll see the market move like this, the sluggish price action, basically that build up, see that move away, inducing sellers, and that move up, trapping the sellers, and then the move happens, right? So it's very simple. You just have to see it and understand it. So let's say we have this as our target, okay? We want the market, this right here, as our target. We want the market here. Why? Because we got structural liquidity below here, right? So we got this move up, inducing buyers, comes lower, respects the low. So respecting the low, building that liquidity below here. So now if we want to be targeting this low, because now there's liquidity there, all we have to do is wait for early sellers to get trapped, right? And as I mentioned, you got early sellers trapped over here. The move happens, right? And then comes again, trapping early sellers, right? Example, this high being respecting this high. So now, boom, that's the move, right? And then you can see here does the exact same thing. Moves lower, induces sellers, traps the sellers, and then has the move. Okay? And the market does that over and over again, right? So if you just understand where that's happening or understand where buyers and sellers are getting induced, it is going to be a lot easier to be on the right side of the market. So, example, right? The market comes lower, takes out this liquidity over here, and then comes up, builds more liquidity to the upside, moves lower, okay? And then same thing, right? You get that move up, taking out this high, inducing some sort of buyers into the market. Okay. And then you'll see, takes out the high, comes, respects the low. Okay. Moves higher, breaks this high, pulls back, respects the low, moves higher, right? Just inducing traders, right? Inducing buyers. You got that order flow. And then the market comes, takes out all that liquidity, and then starts moving to the upside. Okay. Same thing goes here. Okay. We got this high over here intact, right? We have the market coming into that high. Okay. And understanding that this overall low being taken out, right, on, like, let's say on the 1 hour or the 4 hour, induces some sort of traders, right? So that could have been the break of structure on the higher time frame to induce sellers, right? So understanding this market structural shift or break of structure or whatever induced sellers already. Now, right, all these highs basically going to be false, right? All these highs false, false POIs, right? So areas that people are going to be looking for that market structural shift or whatever and try to short. Okay. So you'll see the market move to the upside, build some sort of structure. Okay. And over here, you can see it's very simple. You got that structural liquidity over here, moves away. Okay. Taking out the high. Okay. Finally, you get that move down, clearing this low over here, inducing sellers. Also taking out all this over here as well, inducing some sort of sellers. And you'll see the move that happens over here is very sharp, right? And it does that because, right, it needs to induce sellers. So when they see this move down, it's very, very impulsive. They're going to emotionally think, okay, you know what? The market should continue going lower, right? And then what you see is the market start moving to the upside, right? And ultimately come for that high. Okay. Now, if you replicate that on lower time frames, right, and we look at this whole area right here, okay, looking at that area on the lower time frames, you'll see same thing, right? Same thing internally, right? You got that move lower, okay, inducing sellers. Market pulls back into this high over here, okay. You'll see that sharp move down, clearing this internal, inducing more sellers. And you'll see that pullback into this area, and you'll see that little sluggish or that slow price action right here, just letting sellers get into their positions, right, and giving like false reactions, and then ultimately coming for that liquidity to the upside. So all you have to do is really understand where buyers and sellers are getting induced. Okay, let's break down this area right here. Okay, so we get that move up. You can see over here, prints a low, prints a high, right? Inducing buyers. Buyers get trapped, and then that move away. Okay, takes out the high, leaves this low right here, moves away, break of structure, pulls back into this low. Now you got that structural liquidity, okay? And then you got that move away with that break of structure. So now trap, any reactions from there. This whole area should be a trap. You'll see the market move lower, taking out that structural liquidity. And then if you look at the previous video I made about high probability POIs, talked about this would be a high probability POI, and you'll see the market come into it and then finally move away. So, if you follow along the liquidity, you'll see a move higher, okay? Printing a low, moving away, and then you'll see move lower, right? Basically, taking out some sort of high, inducing some sort of buyers, coming to trap the buyers, and then moving away, right? Ultimately coming for these highs. Same thing over and over again, right? You got that move up, BOS to the upside, coming back, leaving liquidity here, okay? Building that liquidity. So just because this BOS to the upside happened, it doesn't mean the market needs to come back, right? But when it does, now it's leaving liquidity below here, that move away, taking out some internal, okay? Inducing some sort of buyers. And then you get that move down, trapping the buyers, and then finally that move up, right? So all you have to do is follow where the liquidity is by understanding where buyers and sellers are getting induced and where they're getting trapped. Okay. So once you understand that, you can formulate a direction or a where the liquidity is and where it should be going towards next. So that is the end of the video. I hope you guys understood it. You guys are able to follow along. And we are opening up our mentorship soon. So if you guys want to better understand how we trade and how we're able to be profitable from the markets, click the link below in the description. And yeah,